Welcome to a special edition of the Hustle podcast. My name is Gabriel Arambula, co-host John Tran. Our host is behind the screen,
Yes,
taking photo of everything. I'm excited to announce what one of my top performing brokers, loan officers, real estate agents that we do business together with, Isis Bravo.
So there's no easy about me. It's not Isis. It's ISIS. Okay, nothing easy. AKA Ice.
I was saying it in Spanish.
Yeah, no, we are not doing that. There's no Fácil, Isis, none of that. Isis Bravo, AKA Ice. Yes.
I was just going to introduce you as Ice, but then they're going to be like, whoa,
Ice.
Hold on.
So Isis is bad. Isis is worse. It's like, Santo Dios, what is this?
Ice. It's
From
ice,
immigration to
Oh,
terrorists to, right? But anyhow, thank you so much for inviting me.
You're
you
welcome.
Guys, I saw these guys, putting together some podcasts, and I'm like, the hustle. I'm like, let's go. What are we gonna do? Let's go grind.
Yeah,
right.
That's it.
Let's go grind.
And that's what that's what we do. Whenever we do a podcast, we have just a general idea of what we want to talk about, and it just really morphs into a conversation. And in that conversation, the talk points that we have, they add value, and that's the goal, to add value to our audience. And today having you here on our show, one of the things that stands out to me about you and how you operate is a couple of different things. One, you are a unique individual in the real estate and lending space, in that you are a loan officer and a realtor. Not many loan officers are also realtors, and not many realtors are also loan officers. And out of the ones who are, not many of them do much business, and not many of them are at the top of their game. Now, what separates ICE from those individuals is that ICE is a top performer. She is on a regular basis closing transactions, helping individuals who otherwise did not believe they could become homeowners become homeowners. Now, I want to hone in on that just a little bit, because there's a lot of folks that are going to be listening to this that buying a home in today's market in California, it seems like a fantasy. Like, it's absolutely impossible when you are living in a place where the average sales price of a home, $500,000.
Right.
In California, at $500,000, there's some areas where the average price of a home is over $1 million.
$500,000.
Now, I want to start with a couple questions. First off, what caused you or motivated you to be both a real estate agent and a loan officer? And the reason why I ask this is because I've spoken to a number of loan officers and a number of realtors, and I've asked them the question, hey, you're a realtor, you're doing really good. Why don't you just get licensed to do loans and do both? And one of the common answers I get is that, oh, I'd rather be a master of one. And I'm thinking to myself, like, these aren't two separate industries or verticals. It's real estate and lending. They kind of go hand in hand. And so I'm curious as to what caused you to want to serve your client base as both a realtor and a loan officer.
So as you were describing me and hyping me up, thank you. I'm so humbled.
Well, listen, I've known you for more than a day. I've known you for years, so yes. I mean, this is just coming from experience.
Thank you. So, serve, just service, and it's not the paycheck, because I mean, obviously, I got to eat. Louis doesn't buy itself. Kids want college. Kids need shoes. But it's the service, and I'm going to tell you what it was and why I got into it. I was an agent. Don't ever start with just an agent. You are never just the mom. You are never just the wife. You are never just the person. No.
That's good.
I was a real estate professional needing a partner, like literally a partner, to help me with my business and to making it a business. There's a difference. If I do real estate and I run a real estate company, it's two different things. I can sell homes, but am I running a business? And to run a business, you need the right partnerships.
Yep.
You need people that are
Critical.
all in. So with that being said, no knocking the lenders I was working with. I learned stuff from them that I later did not implement into the way I do business. And some I did. So where I'm going with that is the partner, or per se the people that were there, ready to do loans, the majority of the time they were saying no to my clients. And I'm like, ¿por qué? Why no?
Yeah.
Okay, credit this. They would give me, sometimes honestly, they were just like, the lender doesn't like it. Not the lender, but the lender doesn't like it. And I was like, okay. And as now that, and again, not to, sit here and talk a bunch of crap on other people or the way they do business, but at the end of the day, after I learned how to serve and how to do what I'm pretty much focused on now, I realized that it was the wrong partnership that I was in, because I did not have a partner that cared about my client
the same way that you did.
1,000%. And I always go, instead of 100, I say 1,000, because there's more to that. So to break it down clearly for you, number one, accessibility. Number two, the price point. Number 1 and 2 were the same thing. Why? Because they were not accessible because of the price point that my clients were shopping in. I'm going to drop the mic. It is what it is. Now I know.
So let's elaborate on that real quick. So what do you mean by the price point not being where the lender wanted or the loan officers wanted?
Now again, knowing the back end of, hey, there wasn't enough money in the deal for them to do that.
And to give the attention and the care to the client.
Amen. Attention. You know what? And I get it. Everybody has, it's like when you marry or you're looking for a wife or a husband. You're like, hey, what can I afford? What price point am I comfortable in so that I can work towards that? So what I mean by that is, if you look at it in the sense of the loans, there's not much in that loan because of the price point. So why am I going to give that energy? And that energy was not being given to who? My client.
The client, yeah.
Mine.
Because loan officers technically are similar to real estate agents. Their compensation is based on a percentage of the loan amount. So what you're saying is, since they were lower loan amounts, the loan officers weren't that interested, because the compensation would be less than if they did a higher loan amount.
1,000%.
Got it.
So now enter ICE into the mindset of, now I don't want to be in this business. Not that I was trying to retire on that, because no, I was just like, I needed first and foremost a business industry where I could take care of my kids, because I'm a mom before I'm anything else. I mean, obviously before I was a daughter, a sister, but now at this point in my life, for the last 30 years or so, I've been a mom, and my main focus is my children. They are literally my whys. I have 3 of them. They're very different, and I have a lot of whys. Okay. So that being said, this industry gave me the ability to have my kids with me, 1,000% of the time, so that I can just work around their schedules. So now again, back to the shift in mindset, I was putting 2 and 2 together, and I'm like, you know what? I didn't know my client. I was like, why don't my clients qualify? Is my niche or my, my slice of the pie that very, that bad? Or like, what is it? So then I said, you know what? No, let me just get into service, right? Because I'm like, I want to help people. So I'm like, let me get into service. So peel back the onion, and here ICE goes into now the mortgage industry. I become a lender, right? And I'm like, oh my gosh.
You're behind the curtain now. You see how it works.
I'm like at the Wizard of Oz, when Dorothy goes to the Wizard of Oz, and they're like, hey, who's the voice behind that?
Yeah.
Oh, the great mortgage industry. I'm not knocking it, but I'm like, it makes sense. Con dinero baila el perro. There was not enough money, enough cheddar in my deals.
And that's when you discovered, oh, that's why those loan officers were not giving my clients attention, because their compensation is tied to the loan amount.
And you know what? Then when I sat down and I was like looking at my book of business of all the ones that went through, and the ones
there were the higher loan amounts.
Ooh, girl, child. I know I bought homie a BMW. I know I bought his wife some carrots and so forth. But hey, I respect that. It's okay, because I believe greatly in that the Lord allows you to go through the fire to make you into what he needs you to. I just had to learn all that so that I kept my mindset and my focus on service. So enough about me, but now the business. So what I did is during COVID, everybody was making money. There was enough in the rate to make money. No one was saying no to anyone. Capiche? Correct. So what did I do? I picked up my book and I said, look, let me call back on my clients because I knew enough of lending to become dangerous. And what I mean by that is I was like, my clients, the ones that not only were in a lower price point, could not afford, didn't have money. I'm like, these rates are like freaking candy bars.
It
I'm
dropped
like,
by several
payday, Snickers, let's go. And I
Yeah.
fit them all into loans, the ones that had not acquired homes. So, okay, everybody's making money, everybody's happy. The ones that were able to purchase were able to purchase. But not only that, here I am training, learning how rates work. And now we're in this market. I'm still blessed. I'm still able to help, but it's all about partnerships. So now I'm in a new era of my career. Because mind you, I'm building a legacy for my kids. And not only that, I'm building the type of service. So now here I am with you because as we all know, or in the industry, it depends it really does matter who you work with, because at the end of the day, we are not off the rack service. Okay. Just like this tank top doesn't fit me the same way it would fit someone else. It's, we have to be couture. I like using that all the time. Yes, I am that person that finds the product that works for my client because we are not all shaped or cut the same. My credit score, my history, my work, it is not the same. I could have two different types of loans or two dresses in this case, and they're going to fit me different, just like a mortgage product. So what I'm really here to say, or to, break it down for anybody that's watching, is that, guys, if you haven't found the right loan product, shop. I guess we're all shopping for the best rate. It's not about the rate. It's about the type of product that's going to best service your needs. So theLender has wonderful products. Other lenders have wonderful products. We have different types of mortgage brokers. We have different types of real estate brokers. We have different type of LOs. So if you're looking for someone, it's not necessarily going to be me, but if it is, let's go. But if not, always look for that person or that mortgage broker or that real estate broker that's there to serve you. It's not only a service, it's I have to serve my client, because at the end of the day, like I said, with those other brokers or mortgage brokers that I was working with, they did not want to service my client because there wasn't enough built into the loan for them.
You bring up a good point, and this is coincidental, or I don't know what you want to call it, but today the conversation piece on a podcast we recorded earlier was in regards to the process and being in love with the process, not the result, right? And so when it comes to the servant mentality and serving individuals, the way that we serve individuals, where maybe you meet that client and you work on the pre-approval and you find out, well, you know what, your FICO score it's 50 points too low. You can't buy now. However, if you do this thing, that thing, this thing, and that thing, your scores should go up. So can you start doing these things? And I will partner with you. I will serve you along the way till you get to the place where you need to be in order to buy a home. And that is what I've seen in your business, in the deals we've closed together. It's been that, and that is essentially the mentality that I have, that my business partner John has, and in the Hustle podcast, that is the whole reason we do the podcast, to serve, to add value, and it is a part of our journey, and we love the process. We don't know exactly where this is going to go, but we know that if we have pure motives, and if we are consistent in adding value and serving others, at the end of the day, we will be in a better place then than we are now. And so I love that you mentioned that, because I believe that the majority of society, the majority of professionals, are really focused on the paycheck. Now, again, don't get me wrong. Like you said, we all need to eat. We all like nice things. But when you put the paycheck before the process, it becomes more difficult to fall in love with the process, because the process doesn't instantly deliver a paycheck, especially in the real estate and lending industry. You have scenarios where you're out showing homes for months at a time,
Hours
and hours and hours, sending out offers, calling, negotiating, asking questions, doing research, and then finally, after 9 months of shopping for a home, submitting offer after offer after offer, boom, you get the offer accepted. And a lot of consumers don't understand the level of work that you put in as a real estate agent and as a loan officer, the calls that you make to lenders to go over scenarios, to tailor, to get that couture loan for that borrower, because everyone's situation is different. A credit report is like a thumbprint, a fingerprint. Not one credit report is the same. And with lending, there are different guidelines and nuances. It's not, one mortgage fits all. And it's not just a matter of, like you said, hey, what's your rate? Well, it depends. Where's your credit score? What's your credit history look like? Do you have any bankruptcies? Any foreclosures? Is your first time buying a home, or you've owned a home before? Do you have any mortgage lates? When were those mortgage lates? Let's talk about your job. What do you do for work? How long have you been there for? How do you get paid? Is it hourly or salary? Do you get bonuses? Do you get any overtime? How consistent is the overtime?
Is it variable?
Is it variable? It, like, the whole business, and I feel confident in saying this because I have experience in both realms, as do you. I believe that, this is just talking about the process once you're in escrow. I believe that the loan side of the transaction is more difficult than negotiating the purchase agreement, because there's so many moving parts. Now, could you tell us about a time or a scenario where maybe you had a buyer in a difficult situation or difficult predicament, and you were able to partner with them and get them into a home eventually?
Oof. So I have.
I know you got a few. So think of one that just really stands out.
Again, I have a lot of them. It's like tears, but without getting to, obviously without disclosing, because it's very private. Yeah. But I'll tell you this: it is very much a team effort, because you start off with the gist, you're like, hey, what's your credit score? Hey, this. And you're like, okay, now you overcome the hills, the valleys, the peaks, or whatever. And you're like, okay, you cannot do the following. Do not increase your debt. Do not pay anything late. Do not miss a payment. Okay? Do not stop working the number of hours that you are working. Do not get sick or go off on vacation, because now, but they paid me the same. But they did not. Yeah. Well, why? Because it's time off. It's not regular pay. Yep. What makes me think, and I get it, it's 40 hours, but it's like, explain that to the underwriter, because so-and-so missed work this week, 3 weeks ago when we started, and now he's going on vacation. Oh, well, okay, letter of explanation. Variables. You know what? They had this planned trip. Yeah. It's, but now he's sick, and oh my God. And he has a tendency of not paying his stuff, on time. He had a period of time when she had a period of time where she didn't pay her credit cards. She was going through, supernatural things that just, you can't explain. So it shows, like you said, it's your print. Yeah. So here is ISIS going back, fighting with the underwriter, or in this case, teaming up with you and telling you, you go fight with them, tell them this. And we're like, okay, we're, in this scenario. I know which file you're talking about. Yeah, and it's like, okay, now don't do this. Yeah. And and I don't want to say that, anyone is not so smart, but they think it's not a big deal. It is a big deal, because guess what? And
speaking of the activity of the borrower, the person looking to get the loan. And so, if you're out there and you're in the process of shopping for a home, or you're in escrow, or you're going to be in either of those positions, there are things that are critical to ensure that you do and do not do. And we're going to dig in those in a second. I want to continue with the story, but I just want to elaborate on the fact that you're essentially bringing up or shedding light on the reality that anyone who is in a position to be obtaining a home loan, there's like a list of things that you need to abide by, the golden rules of obtaining a home loan.
So fast forward to that scenario. Now ISIS has to stop. Not because, oh my God, I'm too busy for my clients, or I don't want to bother you. I get a lot of, oh, I didn't want to bother you. Don't bother me.
Yeah.
But just like I gave you your attention, I recalled you, I give you your time, I put, slots of time. Now when this fire, because now it's a fire, now things are they're falling apart. They're falling apart, not following, follow. They're falling. I mean,
falling apart.
They're falling apart. I have to stop my day, call Gabriel or whoever my AE is. He's busy. He's got whatever task. You need to stop what you're doing.
Yeah.
Wait, what? And I have 1,000 other people, calling me, literally 1,000 other people. And now this file, guess what? They were expecting keys on this day. Now we have this. Now we have a suspension. It's not I just suspended you. You'll be back in 3 days. No, it's you didn't show the behaviors that we need you to.
Yeah.
We are denying your loan. Oh, go fight and explain. It's not that easy. It's very time consuming.
Yep.
And it is stressful. And then it's like, oh my gosh, now on the real estate side, yes, I'm the agent. I have to go make it or tell the sellers, hey, you're no longer closing on this date. So now locks expire. There's extensions. That costs money.
Yep.
It's money that's supposed to come from the buyer. It's money that they probably don't have. It's money that is adding to their closing costs. It's delayed time. It's everybody
There's
pissed
so many
off.
variables.
There's so many. And it's, oh, ISIS, are you being rude? No, I'm just I'm being honest with you. And now I've stopped everything else on the other side. And now I have other clients that are like, well, why aren't you giving me that attention?
Because now you're essentially in this particular scenario, the borrowers, the people looking to get the home loan, didn't follow the golden rules.
They did not follow
in
the
fact,
yellow
they
brick
did
road.
The exact opposite.
Of
of the golden rules. And so let's kind of like go over that, right? And so a few of the things that anyone in the process of buying a home, whether you're shopping or in escrow, or if you're going to be in that position in the future, let's go over a couple of those golden rules. And I'll start it off. One of the golden rules is do not apply or obtain any additional new trade lines, meaning no new credit cards, no new car loans, definitely no new car loans, no personal loans, no lines of credit, no Best Buy cards, none of that. If you are looking to buy a home, you want to stop getting new credit. That's the first thing.
I had a client tell me on social media, oh, the reason that person didn't buy, because apparently they're loan officers, the reason that person didn't buy is because you had them too tight to begin with. No, actually, no, they had room. But guess what? They ran their credit. It dropped their credit score. Now they no longer qualify for the same interest rate, right? They no longer fall within that bracket. So then now the cost goes up and the DTI went across the roof because now it's a higher interest rate. And it made everything fall apart. And also don't miss work. Why are you taking time off?
So let's elaborate on that. Yeah. So again, second golden rule.
Yes.
If you are in the positions we mentioned in escrow, shopping for a home, or will be in there, and you are working a job that is an hourly job specifically, but if you're working a job where if you take time off, there's an adverse impact to your pay, don't take any time off. In fact, work more hours if you can, get more pay if you can. So again, second golden rule is do not miss work, do not take time off, and if at all possible, try to work more hours, because that does have an impact on your qualifications.
Do not go on disability.
Oh, no.
I'm disabled today. I'm not poking fun. No, it's if I am in the process of obtaining a home and I go, what if God forbid something happens, I get hurt and I go on disability, I can no longer give you a loan because
Bingo.
what if you're never able to come back from your disability? What if you end up having to have surgery? What if they fire you? Because the reality is like,
or what if they say, you know what?
We no longer need you.
You're fully disabled.
Yeah, you're
fully disabled. So now you're no longer getting $8,000 a month.
No.
But you're getting a Social Security disability check for maybe $1,500.
And we needed those $8,000 a month to qualify. Yeah. Oh, well, my husband has sufficient income. I should be fine. No, but we had both of you guys on there. And now you're disabled and we don't know when you're coming back to work. Oh, all of a sudden I'm cured. Good. Thank you, Jesus. You're cured. Go take your butt back to work. Give me a paycheck, and all that. But the worst thing is that clients start thinking that because they go on, I guess it's going to sound funny, on YouTube and they heard somebody say it's not a big deal. No, what were the different, factors? Okay, I had a client that went on disability and I called him and I said, are you really disabled? I'm not going to say what was said to me, but I was like, okay, well, either you go back to work and we have a loan, or guess what? It was so nice to work for you. And mind you, 6 months searching for homes, countless hours. I mean, at the end, when I looked at my account of Follow Up Boss, believe it or not, I had 26,000 text messages. I'm not lying to you.
26,000 text messages?
So tell me how available this one client. And they don't spam me like I do. Like I'll say hello and then I'll do it, no, like 26,000 different messages with countless hours of questions.
All that work that you put in.
Okay, ISIS, you're a mortgage officer, you're a realtor, you asked for it. I'm not saying I didn't ask for it, but I'm just saying for you guys to not appreciate all the work and effort that you've also put in, not just me, but yourselves, and you let it go.
As a prospective home buyer.
Exactly.
It's work.
It's work. It's a lot of work.
The agent sends you the homes, you look at the homes, you study, you do your research. It's a lot of work. It's emotional. It could be emotionally draining. Right? I want to highlight a couple of things. Going back to disability income. So if you are on temporary disability, you will not be able to qualify for a loan until you go back to work and your pay is back to normal. If you have full disability, you receive income, disability income, you can use that income to qualify for a home loan if it's permanent, right? And so that's the difference between temporary disability and permanent disability. Permanent disability, you could use that income to qualify. Temporary disability, you cannot use that income to qualify. Now, another thing that ICE pointed out is, in this wonderful day and age we live in, technology, as we are here now recording a podcast that will be going to multiple platforms within about 24 to 48 hours, other people could do the same thing. And there's a lot of individuals out there that will share information that is enticing, attractive, but might not be 100% accurate. As we've described, in the loan process, there are a number of different variables. And, to boil it down, in how I typically explain it and train new loan officers, account executives, is a loan is essentially a risk-based analysis of 3 different criteria. And I call them, and I was taught this by one of my mentors, the 3 legs of the loan. You have your credit, right? Your credit shows your willingness to pay your bills based on historical data. The next thing is your income and employment. That shows your ability to pay your debts, and how we document that income matters. Is it paycheck stubs and W-2s? Is it going to be bank statements, 1099s? Are we qualifying off the rental income the property yields, right? So income and employment, that's the second leg of the loan. Third leg of the loan is what we call your loan to value ratio. The amount of money that you're looking to borrow in direct proportion to the value of the home. If the home is worth $1 million and you want to borrow $750,000, that's a 75% loan to value ratio. Now, within these 3 factors, it's a risk-based analysis. The lower your credit score and the worse your credit history, the higher the risk the lender takes. The better your credit scores and the better your credit history, the lower the risk the lender takes. The income. If you're using your paycheck stubs, W-2s, and tax returns to qualify for a loan, that's pretty standard. That's a low risk. It's very simple, very standard. If you're using your bank statements or 1099s to qualify, well, it might be a little bit more of a risk using bank statements. So, the interest rates might be a little bit higher. Your loan to value ratio threshold might be a little bit lower. And then, of course, when it comes to your loan to value ratio, that third leg of the loan, the more money that you're looking to borrow against the value of the home, the higher the risk. If you go from a 75% loan to value ratio to a 90% loan to value ratio, that's higher risk. And so all three factors have just a slew of data points within them, like we're talking about. And this is something that consumers are oblivious to, and it's okay. But one of our goals in doing what we do with this podcast, with the TikTok lives we do, with everything we do and everything we're going to continue to do moving forward, it's all rooted in the desire to serve and educate our community, not just the consumers, but also other loan officers, other realtors. You may be surprised, and I know that you know this because you're in the trenches. You experience this. Most most realtors know nothing about the loan side of the business, and I say this from experience in talking to realtors that have been selling homes for decades, asking very elementary questions about loans. Things simple as like, hey, how much do you think the closing costs are going to be? Well, closing costs vary based on how the transaction is structured, and it could be anywhere between 3 and 5% of the purchase price. If we do something like a no point loan, maybe that'll save some closing costs, but most realtors aren't privy, and it's okay. I mean, I feel that they should be knowledgeable, at least have an elementary knowledge of the basic fundamentals of mortgage lending, because it is real estate and lending. I believe they go hand in hand, which is why I always found it very confusing why more realtors didn't become loan officers and vice versa.
My thing with that, let me just piggyback off of what you said. You should know enough to be dangerous. Not even so much dangerous to your colleagues or to the people in the industry, but had ISIS known, let's go back to ISIS. This is all about me. It's my show, right? Well, if ISIS had known what she knows now in those first couple of years, then ISIS would have known not even so much, oh, this is why I can't do business, but I would have been able to educate my client, prepare him better, and guide him with more knowledge. Because had I known why these, and they're not predatory, but in a sense, how these people, why they weren't giving them loans, I would have been able to be like, you know what? No te preocupes, vamos a hacer esto. But now with the knowledge that I have, that I share, that I constantly share, I have agents that I've worked with, some that, listen, and some that listen, they take what, you teach them. Now they're too dangerous for their own health. And I only say this with all love and respect because, okay, now I've showed you enough to be dangerous, but that doesn't mean you know what we're doing or what we're dealing with. Because now let's look at the price. Everybody's like, well, you make too much money. Nope. Well, you're charging too much and this other lender's charging me less. It's the parts of the loan. Are you going to live in it?
Yeah. Is it owner occupied or an investment property?
What is your credit? It's okay. Now another thing, the risk. So if we're going to go back to the type of income I have, if I'm a business owner, it's a bigger risk because what if tomorrow, you die and you no longer have a business because you literally are the one that lays the tile. You're literally the one that does the gardening and you don't have an actual, not that you don't have a business, but you're the one that everybody relies on. You're self-employed. It's a higher risk. So you're going to have higher costs. You're not paying me more. You're paying more for the loan.
Bingo.
So be so knowledgeable that you're that knowledgeable, strong and dangerous.
Okay, so you mentioned something that I want to go back to when it comes to the cost of a loan, like interest rates, points, and things of that nature. Now, again, going back to the risk-based analysis, the higher risk the loan is, the higher interest rate and the higher the cost. That's how financing works. And so it's not like if you're shopping for a hamburger and you go to McDonald's and number 9 is like $9, and then you go to Wendy's, a similar comparable is maybe $11 or $12. It's totally different from that. It's like I was saying, like if you look at a loan as something that is tailored to fit a borrower, it'll be easier to understand the mechanics that go behind it, especially when you take into consideration the 3 legs of the loan. The higher the risk, the higher the interest rate. The lower the risk, the lower the interest rate.
And the less the cost.
And the less the cost. If you're buying a primary residence, a home you're going to live in, and you're documenting your income with paycheck stubs, W-2s, tax returns, and you're putting 40% down payment, that's and you got a 750 FICO score, pretty low risk loan. You should be getting the best terms out there. Your loan officer should be describing to you the option to either structure the loan as what's called a lender paid loan, which is essentially a no point loan, or a borrower paid loan, where you pay an upfront origination fee but get a lower interest rate. So again, if you're top tier credit, best case scenario, income wise, you're going to get the best terms. Now, let's say your credit score is not doing too hot. Let's say it's maybe like a 680, 660, and you want to finance an investment property, and you want to qualify off the rent that the investment property yields. These are all layers of risk, right?
And
someone
cost.
is more likely to make the mortgage payment on their primary residence if they're having a financial hardship versus the investment property. They're more likely to skip the payment on the investment property. And these are not just assumptions. These are decisions made based on historical data that is just analyzed by the individuals in the market that buy these mortgages as investments after they're closed. Because don't be confused, when Joe and Mary buy their home or refinance their home, that loan is an investment tool for someone. Someone is making money off the $800,000 that they lent you at a 6.75% interest rate. And that investment gets packaged and sold off in tranches of billions of dollars to investment firms. And these investment firms are very intelligent, and they are making money because they do the necessary research to determine high risk and low risk at the highest level. And these are things that, even I get surprised sometimes that even loan officers don't even know the details of the business and the mortgage market and how it works. It's like mind blowing. But again, this is why we're doing this.
This is the thing, though. Like and I wasn't falling asleep because of you. I need a snack. But when you're talking about all this and that, at the end of the day, if you're asking me down the street, like, what are you buying? Where are you buying it? It's the cost of the product, what they're offering based off of what you need. So if I'm a paper client, better cost. If I go to Mike's Loans versus Isela's loans, and Isela has a discount and she's giving this for people that have X, then it's going to cost me less here. But that's the benefits of working with a mortgage broker that's a wholesaler, because we could shop all that for you, figure out which one's the best, find you the best scenario. The clients want to do what clients want to do. At the end of the day, sometimes they're chopping you at the very last, minute of the hour, because so-and-so, but so-and-so's giving you that rate, and they don't know everything that you come with, right? All the baggage. Okay, fine. Then guess what? I wash my hands, go with that person, because you get what you pay for.
Yeah.
But I had a scenario. I didn't bring it to you, but I had a scenario. I think we talked about it.
Maybe.
And this person's like, "Oh, I'm going to live in the property. I might live in it." I'm already thinking, you know what? They're looking for the best price, like everybody. But are they legitimately going to occupy it? More than likely not. I priced it at different lenders. A lender gave me a better price. I know that person's still shopping me, or the original lender, which is fine. But guess what? Oh, girl is not doing mortgage fraud. We're not doing that.
No,
if you're not going to live in it, then you're not. I am going to price you on non-occupant.
Yeah. So,
I am not.
Just to elaborate on that, right? So if you're a borrower and you're obtaining a home loan, you need to be like completely honest. Like,
it's
if
mortgage fraud.
If you're living in the property or not, because if you structure a loan as a loan for primary residence, and it's found that you're not living in the property, because banks and lenders, they do inspections,
They do
spot checks to
Someone
see.
came to my house and took a picture of me.
Wow.
And I wasn't with my hair done. I didn't even have that much hair. This is real. It's not a weed. But back then,
I believe you. No, it's real. It's real. It's real.
Yeah,
and it looks good.
I would say pull it, but that's not right. So back then, my hair wasn't as long.
Don't tempt me.
And they cut that out. So they came up and they pulled up and they're like, "Hi, Isis Bravo," and I'm like, "Yes." And my kids were small. My oldest wasn't home, but they're like, "Okay, we just need to take a picture." And I'm like, "Of me? Not right now." I was like not my cute booty shorts. I was in my shorts and a tank top. They came up, they took a picture. The kids were like, "Me too." So guess what? They came knocking. And this is an honest to God's truth. It's not a lie. I don't tell my clients this so that they believe me. I tell you because I lived it. They came and then knocked on my door. They asked me what my name was to see if I was living there.
Wow.
I'm not saying they knocked.
What year did this happen?
We bought our house in 2013, maybe before 14. I'm not saying they do it to everybody, but guess what?
It happened.
It happens. It happened to me, and maybe again the Lord allowed me to. Because guess what?
To experience.
When I take the mortgage loans, and I'm, some of my clients fill them out. Some of them have me do it over the phone. But are you gonna occupy? Well, I can. Guess what, guys? Be honest, because at the end of the day, if it's a Russian or what is that where you play and you
Russian roulette.
If it's Russian roulette, you don't want to be there. I mean, at the end of the day, it is mortgage fraud.
I want to share a story relating to a similar topic, but on the real estate side that I experienced personally. But before we do that, all right.
So where did we leave off before you had your restroom break?
So my story. So going back to honesty and transparency in real estate and lending transactions and how critical it is. Like Ice explained, they do occupancy inspections are real. They happen. Now, my story is actually on the real estate side of a transaction where I was representing a buyer on a home. It was a historic home built in the 1900s, over 100 years old, Victorian home, a beautiful Victorian home. And in this scenario, we closed escrow. Everything worked out fine. Everything was successful. We got credits for repairs. The homeowner even prior to repaired a bunch of stuff because it fell out of escrow twice. So she repaired some of the foundation beams. She put in like a good $30,000 in making repairs to this property before my client purchased it. So my client buys the property. About a month or so later, she calls me and she says, "Hey, Gabe, the toilet's just not flushing. I flushed the toilet and the water doesn't go down. It just kind of swirls." So I told her, I said, "Okay, here's what you need to do. Call a plumber ASAP, local plumber, have them check it out. I'm going to go through the transfer disclosure statement and the seller property questionnaire to find out if the seller mentioned that they were aware of any material defects to the plumbing in the property. Because on the seller property questionnaire, there is a field that asks the seller point blank, seller, are you aware of any material defects impacting the plumbing to the house? It asks that question. And so I pulled it out, I looked. The form said no, they're not aware. And so almost as soon as I read that on the seller property questionnaire, my client calls me. They say, "Gabe, you're never going to believe this. I called a plumber, the first plumber I called, local plumber.
They knew
when
about
I called
the house
them and gave them the address, they said, 'Oh, you still haven't fixed that.'" And so my client, in all her wisdom, said, "No, I haven't, but would you come and take a second look at it and just bring any reports or any paperwork you have pertaining to your previous inspection?" So plumber comes, brings a report with photos of the drain getting scoped, roots going through the drain, and the recommended remediation that the plumber gave the previous owner, whose name was on the report and invoice and the last 4 digits of her credit card. So once we got that information, I called the seller's agent, because that's what you do. There's a mediation and arbitration clause which within a purchase agreement, and if anything comes awry, such as this, where the seller or the buyer or any party involved in the contract has stated something that's false, that's a problem, and so we got to confront it. And so I called the listing agent, let him know what's going on, and the seller wanted to give us $1,500 for a $12,000 repair. So we said, well, I mean, I didn't say we appreciate the offer, but I said, well, that's not going to cut it, because that's like, 10% of what the actual cost is going to be to fix the problem. And I let them know that my client is going to take your client to small claims court, because this is a problem. Your client was not truthful on a legal document, on a legal contract. They were not truthful, and they will be held accountable for it. So fast forward, I got all the paperwork together. Me and my client, we rehearsed the situation. She filed a claim in small claims court, and I told her, I said, listen, and this is in the beginning of COVID, so there was no in-person court event. So I told her, listen, I will be on the call with you, and I will speak and support you, be your witness, do anything and anything I have to say. And no, thankfully, this is a very smart and educated client, multiple degrees, a master's, a doctorate, so on and so forth. So after I gave her the rundown in what to do and what to say and how to speak to the judge, I did not have to say a thing. And when we were on that court case, it was like after my client went first, pleaded their case, and it was beautiful. I didn't say one word. And then it was time for the defendant to speak, and the judge, he was just straightforward and said, but Mrs. Blank,
just fix it.
I still do not understand why
you lied.
Bingo. And there was no answer. And to top it off, this particular individual was an attorney. So
you lied?
Yes. So you would think that they would know that fabricating on a legal and binding contract could put you in hot water. So again, by the way, my client won the case. I didn't ask her how much money she won. It's none of my business, but I'm sure it was at the very least enough to cover the costs, because she did not complain afterwards. So the importance of being truthful on like loan applications, on real estate contracts, it's critical, because you will be held accountable for being dishonest, and you cannot risk and should not risk that by just trying to gain and save a few $1,000s or a couple hundred months on a monthly payment. It doesn't make sense. And in this scenario, the thing that was so odd is, like I mentioned, the seller spent like over $30,000 fixing a bunch of stuff that came up on home inspections on the other buyers that fell out of escrow before my buyer got to it. So you would have thought,
just fix it as well.
Just fix it as well.
Also, like when they say I don't have anything to disclose, they think that by not putting anything that, I mean, I get it. I'm not answering for people, but just put it there, because buyers are supposed to read what it says, and you're supposed to write what, the truth is. But at the end of the day, it's just, Yeah,
that's it. You got to be honest. Like real estate and lending, whether you're a professional or a consumer, is no joke. People have been fined tens of thousands of hundreds of dollars for being dishonest, and consumers as well, professionals and consumers alike. So that's my story. I'm sticking to it. Be honest. And let's go into a quick Q&A.
Oh no, not a test. Okay.
No, it's not a test. It's not a test.
Give me candy if you're gonna ask me questions.
Give me candy. It's not a test, right?
Thank you.
This is
yay.
more along the lines of just a Q&A on maybe like loan products and different tools that we have to offer a borrower in any particular situation. Now, in a scenario, let's say, for instance, you have a scenario where it's a self-employed borrower. Their tax returns show very little income because they have a lot of write-offs, which is common for self-employed borrowers. In a scenario like that, what are some other options that you could take a look at in order to get that self-employed borrower qualified for a home loan?
So one would be bank statements.
Bingo. Bank
Number
statements.
one, yeah.
Right.
Profit and loss is not very popular, but they're bringing
It's
it
possible.
back.
Yeah.
Yeah. Profit and loss, and then also the product that you guys specialize in. Depending if you have cash, you take a certain percentage asset depletion.
Right. And so, any self-employed borrowers that are out there, if you own a business and your income on your tax returns is not sufficient to qualify, we at theLender and in ICE at 21st Century Lending as a loan officer can help you out by using your bank statements to qualify. And let me give you an example of how that works. Let's say you have your business bank statements, and let's say on a monthly basis, you have about $100,000 going through your bank statements on a monthly basis. Now, we have a loan product that at face value, we look at a 50% expense ratio. So if you're getting $100,000 each month, you can use 50% of that as your income, which would be $50,000 a month. Now, depending on the business, if you're like a real estate agent, let's say, well, and you're not the owner of the company, but just a real estate agent, geez, you could potentially go down to like a 15% expense ratio, meaning if you have deposits of $100,000 a month going into your bank account and you're at a 15% expense ratio, that means that your qualifying income is $85,000 a month. Now, a lot of consumers out there aren't aware of this, but what is even more shocking, that a lot of loan officers and mortgage brokers do not offer these types of products that we refer to as our non-QM products, and a bank statement loan being an alternative documentation product. Because again, going back to the three legs of the loan, we look at your credit, and then we look at where's that income, where's the money. We want to see where your monthly payments are going to be coming from. And for business owners, one of the best loans out there to qualify for more is using bank statements to qualify. Now, what about a scenario? What type of loan? You have a home buyer, and they have little to no money down, and maybe their credit isn't the best. What is a good solution? What type of loan could that homeowner or would-be potential homeowner potentially qualify for?
So I was thinking that nada, but no, you guys need a 680, right?
Well, so
On the down payment
let's yeah. So you're on the right track though, right? So let's say they have 3.5. Let's say they have 3-4% down.
I give up. Which one's that one?
So FHA, right?
Oh,
Standard FHA loan, right?
FHA.
Because with FHA loans, you can qualify with 3.5% down. Not only that, FHA is a little less strict on credit scores to where, we at theLender can go down to a 580 FICO score, and you can get up to 96.5% of the purchase financed. Now, we also have another product where let's say, for instance, your credit scores are actually pretty good, but where you need help is with the down payment. Because again, remember, risk-based analysis. The better your credit is, the more options you have. Now, if you're in a situation where you have a 680 credit score and you want to buy a home, we have a down payment assistance program that will finance up to 101.5% of the purchase and give you an additional 1.5% towards the closing cost. So for example, if you have a 680 FICO score and you're buying a $500,000 house, we will finance the entire $500,000, plus we will give you an additional $7,500 towards closing costs, which is a huge win for borrowers, for people that are buying homes. Now, the other win, and that is a mutual win for the person buying the home and for the loan officer is our pricing on what we call our Not a Plus loan. That's our down payment assistance program that's backed by an FHA loan. Our Not a Plus offers such attractive pricing, such competitive pricing that a borrower could ultimately obtain a no point loan on our Not a Plus. So that's going to save them in paying upfront points for the loan. That's also going to give them an additional cash, in our scenario, an additional $7,500. So in all reality, with our down payment assistance program, if you got a 680 FICO score or higher, and you're buying a home of about $500,000, you are literally going to be saving over $15,000 in closing costs with our Not a Plus if you're buying a home of about $500,000. Now, another great thing about this loan is that there are no income restrictions with this down payment assistance program, as it follows FHA guidelines, which do not have any income restrictions. So again, if you're a homeowner, or rather a home buyer out there, you're shopping for a home and you have little to no money down, credit's not that hot, we can get you approved with the FHA loan down to 580 FICO score. Let's say you're a buyer, your credit score is actually really good, above 680, and you have little to no money down and are trying to save money on closing costs. The Not a Plus is a great solution for you, and that's something that we as a wholesale bank offer, and our business partners like ICE, she can help you get that loan packaged up, sent, put together. ICE sends a loan to me, we fund it for you. And that's the partnership that we have. And like I mentioned, our whole goal and the reason why we do this is to serve. I don't get paid to make this podcast. This makes me no money. ISIS is not getting, this is costing us money by being here and doing this. But we firmly believe that if we add value to the community, to consumers, to realtors, to loan officers, we know that we will get that value back to us one way, someday or another. That will happen. It's a fact. That's how we've operated. That's how we operate. And time again, we're constantly blown away and surprised by the favor and the blessings we get in our day-to-day business transactions and negotiations, just by operating from that perspective and mindset. So aside from that, anything you want to add on that, Ice?
Next time I'm bringing candy, but this is what I would love.
Next time I will have candy for you.
Yeah, because
what's your favorite kind of candy?
Just sugar.
Okay, gotcha.
So I would like to add this: is if you're shopping a lender, whether they have, the client has really good credit scores, if they have, less than favorable, because I don't like to refer to credit as bad, because I don't think it's bad. It's just less than favorable.
Yeah.
Because there are loans, there's manual underwrites, where you have lower than 580, you can still do those. You guys do those?
Manual, yep. Yeah. So we'll do a manual underwrite down to 580 FICO score.
Okay, well, that down to a 580, but we'll talk about other ones when we're not here. But anyhow, if you have less than favorable credit, the main takeaway that you guys should take from anything or anyone that you guys sit down with is, let's build you a roadmap. If you're not ready now, let's see where you need to be, or how do you get to where you need to be, so that they could hand you keys so you guys could buy houses. I think that's all about time and investment and service. Whether it is with Gabriel, myself, or whoever you guys are working with, if that person is not taking, like, let's just say 10 minutes of their time to give you a roadmap, okay, whether it's start here, end up there, or it's just a straight shoot, straight shot, then look for someone else that will take the time. Because at the end of the day, it is about investing, okay, in the client. It's about servicing the client. It's about guiding and protecting you guys, sometimes even from yourselves. So, but with that being said, I think that's more than enough information. I think that next time Gabriel promises to have sugar, and I'll bring water so that you can buy them. Yeah, because when you drink water with sugar, it's like, woo!
Exactly. Right.
We'll do that. Yeah, it'll kick in. But if you guys want a one-on-one, just contact Gabriel, myself. We could, guide you guys. He also does real estate, which he's not going to promote here. But if you guys need somebody that speaks a lot of Spanglish and makes you laugh, call him. If you want someone that's bilingual, speaks English and Espanol, call him because he does both, or call myself.
And here's what I would say, right? To add to that now, anyone looking to buy or sell any real estate or finance or refinance any real estate, that's your girl. Reach out to ICE. Okay, that's the first thing. Second thing, and this is what I want to elaborate on with ICE and how she operates in comparison to other mortgage professionals. There are a lot of potential and would-be homeowners or home buyers out there that have been denied. They've gone to Bank of America. They've gone to U.S. Bank. They've gone to whatever mortgage company, and they've been told, no, you don't qualify. Now, the difference between them and ICE is that ICE will say, hey, listen, you don't qualify now, but she's going to put together a roadmap. She's going to say, hey, okay, what's your goal? Where do you want to live? What do you want to buy? Let's look at the price point. Okay, here's where you are. If you want to get over here, here's what you need to do. And if you follow these steps, you will be here. But you got to follow these steps. And that is the unique offering that someone like ICE does. And like I mentioned, I've known her for a few years. And I've done business with her. And I know her transactions. I know where the business comes from. And many, I would even venture to say, the if not 50%, maybe even greater than 50% of these clients, and you correct me if I'm wrong, are clients that you initially spoke to that did not qualify. They followed your roadmap and they ended up becoming homeowners.
Amen.
Is that right?
Yes. And preferably, I mean, mind you, some during the transaction, because we were already, deep in it, but the majority of them are like roadmap followers. Where, I like to start with pink heels and then end with pink keys. So we start there. Like, there's your little roadmap. If you're a dude and you don't wear pink shoes, I respect you. If you're a dude and you read them, even better.
There you go.
But whatever the shoes that you're wearing, just think of it like this. It's, how do I get to where I want to be? If I'm not there, you first initially have to change the mindset of si puedo, si lo voy a hacer, y si lo quiero hacer. Because I can show you, I can guide you, but I cannot for the life of me make you do something you are not ready for in the mind.
Fact.
Be ready.
Fact. Yeah. Be ready.
Be ready. And when you're ready, let's go. It's all in. It's all in for us.
100%. And I would even venture to say, when someone partners with you, it's not, at that point, it's not a matter of if, because ultimately, like and granted, there are some scenarios where it's just never going to happen because there's not enough income. You just get this type of income, that type of income, and the numbers don't line up. And in those scenarios, you have those conversations, but I imagine even in those scenarios, you probably still provide solutions. You ask, like, hey, who can we put on the loan as a non-occupying co-borrower?
Do you have anyone like my tío, tía, primo, tía, whatever, mom, dad? So I'll give you this before we close it up. The other day I was on the phone with the client that came through one of my social, because I thank you, social media, thank you, who, for not getting rid of it, because yes, I still have my clients. This client was like, I'm not sure, Isis, I'm not sure. And I said to her what I'm saying to you, it's a matter of your mindset. When you're ready, because I'm not going to push you. Number two, you need to give up something. It's either location or expectation.
Yeah.
Because I can, if I remove the location and I'm like, hey, I'm going to make the sacrifice. I'm going to go out another 40 minutes, enjoy some candy on the drive home, bump some Tupac or whatever you guys are listening to, Carol G, whatever, or techno, whatever. If she's ready to, to move from the location, good. But if she has an expectation that's just, it's not here, it's never going to happen, then it's either one. Either what you expect, change it, like tweak it a little bit, or change locations, because location dictates price. Expectation dictates price. So if I'm expecting X, but I can only afford this, I'm never going to get there. I have to adjust. If I want to live here and I can't afford that, but I'm like, hey, I'll go there. It's done.
And you bring up a good point, because a lot of folks out there are home shopping with a champagne appetite, but a Budweiser budget.
Oh, I like that one.
Right?
I use something else. Can we say what I say?
What do you say?
Caviar taste on a McDonald's budget.
There's
nothing wrong with McDonald's, though.
Right.
Yeah, they'll give you that carb face.
A lot of buyers go out there with that expectation. But in all reality is, as someone who is a first-time home buyer, you just need to get your foot in the door. That's it.
Let me piggyback off of that. My daughter and I were in the car, and again, I believe she should record me like 1,000 hours a day because I'm funny. But I was like, yeah, I'm funny. Besides the looking, but I was like, oh my God. She goes, you know what, Mom? We should totally, like, if people don't want to buy or they're thinking of buying and they can't afford whatever this is, then again, lower your expectation. Get in somewhere.
Yeah.
Before we used to be like more, not even so much accommodating, but our mindsets were like, hey, as long as I get in there, I can, essentially obtain what I want in the future. Yeah. It's your starter. I'm not saying like your starter husband, starter wife. No, I'm saying like your starter home. So change your expectations. Get in the game. Stop paying someone else's mortgage.
Yes.
It is not your equity.
Nope.
It is not. No. And if you're building a house in Mexico, I love you. I respect you. Let's go. But why are you paying for somebody's house here?
Yeah.
While you're building your own over there?
Yeah.
No. Switch it up. If you want to relocate to Mexico when you guys get older, then sell it, cash out, or leave it renting so it can continue to make you money.
Make money. Yeah.
Like, I get that. I get it. A lot of my clients are like, ¿sabes qué? I want to move to Mexico. Ya estoy haciendo mi casa. Good for you.
Yeah. Yeah.
Maybe I could rent it, Airbnb.
Right.
But at the end of the day, you're still paying a mortgage. Estás pagando la casa de alguien, pero no es la tuya. O estás pagando el apartamento de alguien y no es tu dinero. So whatever the case might be, you guys got to get in the game. You guys are paying something. You're just not paying your own.
In addition to that, in addition to paying someone else's mortgage, so as a renter, you're paying someone else's mortgage. In addition to that, and this is, in my mind, the biggest loss is that potential equity gain, right? So history has proven that over time, the value of real estate increases. It's proven.
Yeah.
If you go to 1980,
go
to 1980, a house in 1980 in Huntington Beach costs less than a house in Huntington Beach in 2025. Am I wrong? Tell me I'm wrong.
Location.
Yeah.
And the market.
That's it.
Yeah.
100%. So, anyone who's out there who's listening to this and who's even thinking about like, could I buy a home? Should I buy a home? Would I buy a home? You need to tap in. You need to reach out. You need to reach out to ICE, have a quick conversation. She'll go over your scenario, get you in the right direction, put together a roadmap. Because I'm telling you this, if you think that interest rates are going to drop and home prices are going to drop, you are mistaken. There are some pockets where maybe you might see home prices drop a little bit. Markets like Texas, where there was an oversaturation of investors that are now trying to exit. Same thing in Florida. You'll see those pockets. But by and large, the areas that have demand, and again, I could speak to Southern California because this is where I live, area pockets in Los Angeles County, pockets in Orange County, even Riverside County. There's desirable little pockets. Those areas are going to continue progressing under the circumstances of a natural, or rather a healthy housing market, where we have a 3 to 6 month supply. Average days on market is about 30 to 60 days. All that stuff's normal. So again, anyone that is watching that is not a homeowner, that would like to become a homeowner, sorry to burst your bubble. Home prices in high demand areas are not dropping, and interest rates are not dropping to pandemic levels. If and when interest rates do drop, that is going to cause the prices of homes to go up, because when the price of money is cheap, more people borrow and they flood the market to try and buy real estate.
And when overbid.
And they overbid, driving prices up. So the time is now. And if you can qualify for a home loan, find a property that meets your needs and afford the payments, now's the perfect time to buy a home. So tap in.
I heard this, I can't remember where I heard this, but they're like, don't shop for a mortgage. Okay, don't come for me. What I mean is shop for the payment.
Yeah.
If the payment fits your budget, go for it.
Yeah.
Because real estate goes up and down. An apartment, you just pay for it. So pay for something different. Pay for your mortgage versus paying for your apartment.
That's good.
it.
That's a good perspective. And so to
Yeah,
elaborate on that, like, hey, if you're paying $2,000 for an apartment,
then go look for it. I mean, go buy yourself a house in Hemet at 200 and something.
Boom.
Yeah,
there you
boom.
go.
Starter.
Start somewhere. You buy that house.
Yeah.
You start paying it down. You're building equity. You're saving money. Now you got equity in your house.
Yeah.
Maybe a few years down the line, you do a refinance, pull some cash out, use it towards a down payment on a new property, and now you
rent
move up.
that one.
You rent the old one.
Yeah, now you have money that you don't have now.
And now you have 2 houses.
Now you got 2 properties. Now you got 2 types of cheddar.
Yeah,
that makes it better.
You repeat it.
And you repeat.
So you go from property 1, 2, now property 3.
Like Monopoly.
Just
like
literally
Monopoly. Like Monopoly.
Literally.
And this is the thing. So I says I don't have money for the down payment. Hello, we have nada. No down payment.
No down payment.
Like we have nada, but that's the acronym for their thing. Their down payment assistance. Oh, the rate's higher. So you're using someone else's money. That's the cost of using someone else's money to make use.
Now on that note, though, just to be clear,
what
the interest rates on a nada in comparison to going conventional and maybe going with a 5% down payment or 10% down payment, the rates aren't that far off.
So, but again, I mean, I love the fact that he's so, so what's informative, but we're just talking like just slang here. We're just saying, hey, look at the payment. You don't have money for down payment. Go get this. I get it. I love how he's like, hey, the interest rate, I get all that because that's an objection. Well, the interest rate is bad. Yeah, but you're getting in for nada. Yeah. You're investing.
Bingo.
That's it.
If you can get into a house,
just stop
with little to no money down.
Because guess what? Those
are your complaining about.
Your objections are the reasons why you don't own a home.
Boom.
It's not an objection for me to overcome. It's your own objection for your butt to buy a house.
Yeah.
Because I can make up all the solutions for you. I can give you all the reasons why you should, but your mindset isn't there. You're the one in your own way.
I got a good.
Go.
I got one more story.
Okay, go.
So I had a scenario. I had a scenario where
I was like, let me get Kenny. No, I can't shoot because
I was representing a buyer and a seller. Right? Okay. I was representing a buyer and a seller. The buyer's original loan officer said he couldn't qualify for a purchase price over $500,000. Right.
What area?
It was we're out in Feeling, and so I said, listen, like, give me some basic information. What's the gross income? What are your monthly debts? What do you think your credit score is going to be? Ran the numbers, and I thought, you know what, this loan officer that you're talking to doesn't know how to do math, because my math tells me that you're right at about like a 49% DTI.
Maybe they didn't know you could go up higher. Okay, continue.
Possibly, which lets me know that and your credit score is X, so you can qualify for down payment assistance program. So let's do this. Let's take a look at the house. If you like it, then I'll take your loan app and we'll go from there. So fast forward, I put this deal together. I get the buyer a $25,000 credit for closing costs.
Let me drop
from the seller.
Almonds.
$25,000 credit for closing costs. But wait, there's more.
Oh, I love this.
To make this deal work,
what happened?
Because they had literally like no money, I had to give them $5,000 of my commission.
Easy day.
Right? So we're in escrow, we're going, everything going forward.
Right.
And then I get a call from the buyer saying,
we don't want to. We're
no,
scared.
You know what? We don't want. We decide. Maybe the payment's too high. And mind you, I let them know what the payment's going to be. Yeah, we think the payment's too high. And,
they were shopping you.
Well, no. Here's the deal.
Oh.
No one else could get the loan done. No, the report was really good.
They still shop you regardless. Go on.
And so they decided to back out, and they didn't get the home.
They never bought anything. Nope. So do you have them on read dog? Because maybe I could close it for you.
No. Well, here's the deal. The great thing about this business,
yes,
you could pick and choose.
Yes, I get it.
And the last thing I want to do is work my tail off for someone like that for another 30 days, sacrificing money out of my pocket, making phenomenal deals happen, only for them to back out.
I totally respect them, and I've been there before. It happened to me about a month ago, but I'll tell you this. It's again about the mindset. I'm like, we're similar, but I think I would go in for another one because guess what? They already ran my time. I'd shoot them up and say, hey, not shoot them up, but like hit them up and say, hey, are you guys still in the market? Oh, we're still renting. Oh, so then let me do the math. You just wasted this. Are you ready to give it a go?
Yep.
I mean, just one more.
Yeah, give it a try, right?
And if not, then I'll close them for you. You can still have them.
There you go, and just buy me some steak.
I'll buy him some steak. No, but at the end of the day, and I'm just playing with them, but you're in your own way. It's your mindset. Yeah. Just stop. It's whatever you put your mind and your energy to, you can achieve.
Yes.
I dead ass believe that.
100%.
Because if I put my mind into, hey, I'm going to go buy a dress. If I don't have money for it, I'm going to find the way.
Get the money.
Okay? If I say I'm going to grow my hair, I'm going to go look for vitamins, I'm going to invest the time and energy, I'm going to, condition my hair, I'm going to take care of it. If I'm going to go to college or school or change jobs, I'm going to look for a job. I'm going to look for a college. I'm going to
do the work.
I'm going to sit my ass down. It's whatever you set your mind, whatever you set your mind to, you will accomplish. So if you guys have that mindset of, I'm going to get keys to my own house, that's the first step. Let me help you with the rest. I got you. The rest, it's on me.
Make the decision
and let's go and commit. That's it. Lock in. Lock in. That's another term from the 90s that everybody's using now.
Bringing it back.
Lock in. But back in the 90s, we did this stuff. I don't know about you guys now. I'm just saying, we locked in and we did it.
That's right.
So if you guys are going to lock in, let's go. Thank you for having me.
It's a pleasure.
It was so much fun.
We're glad you came by.
Thank you.
We're going to do more of this. We'll talk about, the experience and the journey.
I think before we go, let's make you speak a little bit of Espanol. So in 2 minutes, give me the rundown of everything you just said in Spanish.
Okay, entonces, esta es la cosa. Tú estás escuchando o mirando y no tienes una casa. Y estás pensando, yo puedo comprar, no puedo comprar, ¿qué necesito hacer? ¿Qué necesito hacer? Llama, mandar un texto, un código electrónico y dice, mira, yo quiero mirar si puedo cualificar para comprar una casa. Ella van a ayudar con y van a decirle que si no puedo cualificar ahorita, van a decir qué necesito hacer para cualificar. Y esta es cosa muy importante. Y el persona trabajar con es muy importante también, porque tiene personas, si tiene algo difícil en la aplicación o en el crédito o algo, tiene personas no quiere ayudar. Pero con ISIS, ella van a ayudar, van a decir, ok, mira, el crédito necesito arreglar esta cosa y esta cosa. Y con tu trabajo necesito trabajar 40 años cada semana y no menos de Ella van a ayudar. Y si tiene una situación difícil ahorita, ella van a ayudar, van a poner tiempo en explicando qué necesito hacer para ganar llaves para tu casa nueva.
Yes, you're so good. There we go. Ya vieron? The best commercial, and I didn't pay him, but I owe him steak. Thank you guys so much for having us. Yes. It's hustle, and to your co-host, thank you for giving up your seats.
Yes, indeedy.
Thank you.
Thanks for having us. Hey, we'll hear from you soon. Reach out, tap in. All the info that you need to get a hold of us will be in the description below and in our bio. Until next time, stay blessed, stay hungry, stay hustling.
Ooh, I like that. Stay hustling.
All right.
Yeah.
Let's go.
Let's go.
Bombastic. That was pretty good. That was a long